Hello everybody, hope you're doing well. It's Lane here with MetaShackle. I'm going to be going over a chart with you that literally blew my mind. I was in the process of putting the second part out to the two-part series video talking about the flash crash in April when I decided to look on some of the charts because I was just exploring them a little bit more in an attempt to try to zero in as close as I can on the day that the flash crash will occur, as well as close to the day that I believe that the breakout will happen in the month of May. So after looking at all of the ISO 222 token charts, I didn't see anything that brought any new ideas to my mind. And then at the last moment, I thought, I want to look at SUI and see what it's doing because I hadn't really checked that out for a while and hadn't been paying attention to it since the Trump pump kind of came to a screeching halt in mid-December. And what I saw on that chart absolutely blew my mind. It showed me some things that really intrigued me and gave me little bits of information that I simply was not getting out of any of the other charts. So, instead of releasing that video tonight, I'm putting that off and we'll be releasing that tomorrow instead because I wanted to go over these charts, make this video showing what I had discovered, why it was fresh on my mind. So hopefully this will blow your mind just as it did mine. So let's get into this. So here is the current SUI chart. Just like the ISO 222 tokens, it's exhibiting the same 5-wave internal wave structure that we're seeing throughout all of those other charts that I've been showing you recently. It's trading in a descending wedge pattern and has recently swept the lows, and not only swept the lows, but it also swept the lows of the lows, trading into this fair value gap right here in this consolidation structure that started in mid-October. So we're going to go back on these charts a little bit. Now this was the previous pattern that SUI was exhibiting. The pattern broke out, set a high, came down, swept this low, setting a new low, came up, took out this previous high, breaking the structure and setting at the time an all-time high. Coming down to the bottom, sweeping this low yet again, then consolidating downward in a descending wedge pattern exactly like we're seeing in the current chart. It basically formed the equilibrium zone right here in this area. And if you measure it, although it's not perfect from the top to the bottom, it is trading very close to equilibrium here, as well as off this previous low candle here, which was nearly perfect, which is something that you always want to pay attention to. Now back here, when this entire breakout first started, it came down, set this all-time low right here. Then we saw the breakout. After it consolidated in this pattern, it bounced off the bottom trend line right here with, at the time, what was a liquidation candle, breaking up, bouncing off of the upper trend line, coming down and sweeping this previous low and tapping about halfway in to this fair value gap that was set right here at the lows. Now this is absolutely incredible because this is the all-time low right here. The only point of support on this entire chart at that point is the bottom of this fair value gap right here. That was the point of support, and subsequently the price traded right down to that, leaving the only amount of liquidity on the sell side right here, which is basically where all the market makers, institutions, and hedge funds were, which is why they didn't sweep this low, because this was their positioning, so they didn't want to take that out naturally. So now we will come back to this fair value gap. I've also extended the equilibrium line all the way through into the new structure. So once this swept the liquidity here, tapping into the fair value gap, it broke out of the upper trend line of the descending wedge, came up, set a high, fell back down, set a low, broke this structure and went on a hell of a tear. Came up, set another high, came down to the bottom here, swept the liquidity of this previous low, then swept the liquidity of that low, which is incredible, forming this fair value gap that formed right here. It even tapped into this, nearly hitting the bottom, going on another tear, breaking the structure, incredible. Went on another run, hit another high, consolidated in this area right here, taking out the previous low, setting a new low, going on another tear, breaking out of this structure, coming up to the top here, retesting the bottom, what was soon to be the equilibrium zone, coming up to the top, coming down, setting a new bottom in this area right here, going on a tear yet again, breaking this structure, setting a new high. Then once it had topped out in this structure, not only did it set a new high, but it did the textbook move of sweeping the previous high before falling down. Now the top of this is absolutely incredible to look at. If you look at this pattern, as far as shorting goes, this was the perfect opportunity, and this is a textbook setup right here. And it also shows you how accurate my Fibonacci zones are, as well as the equilibrium zone. After setting this high, taking out this previous top, sweeping the buy-side liquidity, it then collapsed, bouncing off of this area here, coming up to the top. This second candle that came down bounced perfectly off of the 4.5 fib, coming up here, breaking out of this area as it formed a fair value gap right here. It punched right through it. Then as it came back down again, it swept this previous low. Incredible. Setting a dragonfly doji candle right here. Price then came right back up. And if you know anything about trading fair value gaps, you would know that once this collapsed, failed right here off of the top of this fair value gap, you would be looking for a short entry at this midline right here. This is exactly where you would want to set your limit sell order. Price fell down, sweeping that previous low, coming up here, breaking in. This is when you would have wanted to go short, as it was confirming the fact that it was falling by not taking out this previous high. You can see that this candle wicked right up perfectly to the 7 Fibonacci. Then price utterly collapsed. As the price started to collapse, it fell down to this low here, which fell exactly at the equilibrium line in the equilibrium zone, breaking the structure right here of this entire pattern. At this point, you know that this run is over. The price continues to fall, coming down, setting the liquidation candle that we saw right here on February 3rd, giving us the 2 points we need to set the lower trend line for the descending wedge pattern. Price then came up instantly, recovered, went back up, gyrated, eventually bounced off of the upper trend line. Now we have our second point for our upper trend line. Price continued to collapse, breaking this structure, then bouncing off of that line yet again, falling back down into what is a fair value gap that formed right here in early November, setting a low right here near the top, which swept the liquidation candle low right here. Then it came up yet again, coming down and sweeping that low. It's just gathering more and more liquidity and filling that fair value gap to where the price is trading right now. That is absolutely incredible. So from the chart, you can see perfectly the descending wedge pattern. This descending wedge pattern gives us information that none of the other ISO 222 token charts give us.